Let's talk about the L&T buyback, which has been scrapped by the market regulator, paving the way for perhaps all that talk with regards to them coming out with a special dividend for investors. I believe Deepak Shenoy joins in with a quick take on that story. Deepak, good to have you on the show. Good morning.
Good morning, Tanvi.
How do you see the market reacting to the cancellation of the buyback and the proposed, well, it's not come on board officially, but the expectation that there could be a special dividend?
Yes, I think two things here is that with dividend actually gives you a 60% kind of a tax, and that was why buybacks were being used. So because 30% of your profits are taxed at the company level, and then there's a 20% dividend distribution tax once you choose to distribute dividend. If you're a shareholder that gets more than 10 lakhs of dividend per year, you're going to pay another 10%. So effectively, any payout through dividends is like a 60% hit for large shareholders, which is why it's not really, buybacks have been used. I think the problem that SEBI is quoted is that the consolidated debt to equity ratio once this buyback is done would be greater than 2:1. So that's something I don't consider valid, because they have a financial subsidiary for one, which has about 50,000 crores in borrowings, and that's considered debt. But a financial entity is usually levered 10:1 or even 5:1. By definition, they don't make any money if you're only levered 2:1. So you should actually remove the financial entity, and some of the SPVs they have in the road building business and so on, where the debt isn't actually supposed to be paid back by L&T, but actually at the SPV level itself from the cash flows is where the debt gets paid back, and everybody understands that it's a ring-fenced entity. So if you remove those, the debt to equity ratio even after this will be much lesser than 2. So I believe SEBI may not be on the right foot on this, but the law is a law, so you have to deal with it.
That's the way you go to account for holding companies. I'm surprised L&T actually overlooked it. Now let's understand the entire thought behind the buyback. The reason why you do a buyback if you're a company is that A, you are confident of your cash flows, B, it will automatically have an impact on your return ratios. Now that SEBI has rejected L&T's buyback, the return ratios which would have improved largely because of buyback would remain subdued. So what happens next?
So the return ratios actually here in this case, what would happen is the reserves would have come down. I believe, the original intention of buybacks were to, for instance, utilize cash to buy back shares that were relatively undervalued from the perspective of servicing equity, and therefore, you could get better longer-term returns. But recently, because of a certain tax change, we've had companies doing buybacks rather than giving dividends, or in fact, many times they would choose to give smaller dividends and do buybacks. It's simply a replacement for the promoters being able to get cash flow without having to pay the 60% tax that I was referring to, because tax of a buyback is only 10%. I mean, of course, you will pay 30% at the company level, but beyond that, there is there is only going to be a 10% long-term capital gains tax, and that too, even if your share has gone up above the levels it was in January 31, 2018. Most companies are not at those levels. So a relatively low tax distribution of income. Now, one of the problems here is that it has attracted a lot of small investors who, because of a 15% reservation for small investors in all buybacks by regulation of SEBI, they buy a stock which announces a big buyback and tender shares. And because of the reservation, if they're allocated only 5%, sometimes the small shareholder quota is not full. Therefore, they get more of their shares accepted, maybe 40, 50, even 100% of their shares. So because buybacks are at a 15-20% premium to the current market price, you can make a 20% gain on this. We've seen this, we've actually participated in some of this in the last 2 years, but it's become a very crowded trade. We've seen a lot of people rush in, brokers as well, encouraging their customers to do this. Therefore, L&T might see a setback today, because a 9,000 crore buyback would have had a 15% reservation, which is a huge amount, even for retail shareholders. A lot of them had rushed in. Now a cancellation would mean they would want to exit, because they were never really buying to participate in the company's future.
Yeah,
I believe that's the restriction. That's all.
Yeah, you know, Deepak, in the pre-open rate itself, you're seeing a slash of 10% on L&T. There are other names also which would be reacting to their earnings. DCB Bank as well is down, but I'll come to that in just a bit. Deepak, what do you do now with L&T? As an investor, do you buy this decline just yet in L&T?
So I think I have the L&T fundamentals have been iffy in the last few years, but that's how L&T is. It's not a all-weather kind of investment. It's great in capex cycles, infra cycles, which I believe will come in the next few years. It is also getting rid of businesses that they don't necessarily want to own. So they're selling a bunch of businesses later this year, and perhaps that might trigger a buyback or special dividend next year. But that is another good factor about it. And thirdly, they have listed a lot of the entities that were housed within L&T. So the L&T Technology Services, L&T Infotech, L&T Financial Services. At some point, if there was more of this, listing, delisting, and an exit of the holding of L&T in these businesses, that would actually make L&T standalone, or L&T whatever is left of it is at a much more attractive level. And I think the time is coming where L&T is good now. As a shareholder, I've owned the share for over 20 years, so I am biased in that respect. But I think it's a good fall right now would make me look at it in terms of fresh buying as well.
Okay, Deepak, let you go on that note. Thanks much for taking the time out and joining in. So there's L&T, and